had the great pleasure of speaking with him a couple of days ago about what he does in the market, and it's pretty good stuff. You guys don't know him, you should Google him. I'm sure you'll find him. Kansas, Michigan, Canada, Australia. Somebody's clearing their voice. Who's got a mic? Somebody's got a mic open. That must be Amar. Okay. All right, Amar, give me a mic test real quick.
Hey, can you hear me?
Yes, I can hear you. Can everybody hear Amar okay? Roll Tide. All right, so you mute your mic and let me go through what the plan is for tonight, and I'll turn it over to you. All right, good evening, everybody. This is Jeanette Sims at Trade Thirsty. We'd like to welcome you to tonight's event. We call this a three-man market mastermind. We do this every other month here at Trade Thirsty, and what we do is try to go out and find guys who can bring really good content to you, give you some trading suggestions, what they're doing in the market right now that makes money for them. We'd like to welcome you to tonight's event. We are recording the event and hope to have it to you within the next couple of days, so be patient with us. And if the recording does not go off properly, then I would suggest you take some really good notes tonight. No, I'm kidding. We are recording in several places. Hopefully, we can give some good, good clean audio and visual. Tonight we've got 3 guests, and I'm going to start with a couple of introductions here. So this is how it rolls. We give them 1 hour apiece to speak and to tell you about what they're doing in the markets. And so let's go first hour. We've got Amar Hussein, great friend of mine. We've known each other for a very long time. He's coming to us out of London. And he's going to be talking about unusual activity. Then we're going to bring up number 2 in line, Mr. Matt Buckley. He's going to be talking about options. And I love the photo and the relation there to the Top Gun. I got that picture and I thought, wow, what a cool picture. And then I saw his title and I thought, oh, that's even cooler. I'm a big Top Gun fan. And then another good friend of ours, Thomas Wood. He's going to be talking about naked trading, how to trade price action trends. So that's our total for tonight. 3 hours, 3 guys. We're going to let Amar kick it off. He's going to share his screen. Amar, you've got 1 hour.
Hey, Jada. Hopefully everyone can hear me okay. Even though I had my mic muted, for some reason the sound came through. I think it was from the other mic on my screen. I can't yet... there you go. I can show my screen now.
Yep, I just passed the ball to you, Amar, so you should be able to...
Thank you very much.
Sure. No problem. There we go. We see it. I see it very clearly.
Brilliant, guys. Okay, so my name is Amar. I am coming from London, and because of we've had like a 1 hour clock change here in the UK, so it's a little earlier for me than I would normally do a webinar, which is pretty cool. So, guys, we're going to do a great presentation today on the 7 most powerful information sources for stock traders. There are a few more than that, but I kind of thought the number 7 sounded quite good, so I stuck with the 7 most powerful information sources. So hopefully my sound is coming through loud and clear for everyone. I do sometimes speak a little too fast. If I do let me know, and I'll try and slow things down a little bit. So let me tell you a little more about who we are and what we do. Hopefully some of you guys are already familiar with me and the research and the things that we do. I run a website called Financial Juice and a few other things as well. But I have a team of guys that work with me. We're a trader research team, and we basically have 47 plus years, probably a lot more than that, combined of market experience. Everyone on our team is a trader, and in combination with what we do as traders, we also put out research products and this kind of thing. I'm a real trading nerd, geek, however you want to describe it. I love it. I love exploring things. I love coming up with new ideas, new ways of innovating and looking at market information and market data, and then we use it for our own trading, and after a while we kind of turn that information and that research into product and research that we share with other traders. So unusual activity is part of that process. Where we focus and what we're all about is on the technical side of things. which is pretty cool, and we've got some great things that we put together there. And we also focus on the fundamentals. So Financial Juice is our free side of things, where we put out some great news information and information like that. And Unusual Activity is basically where we really try and make the magic happen and take things up a notch. So guys, today's presentation is going to focus around a question, and I want you to help me with this, guys. As we're going through this presentation, feel free to ask questions, and I'll try my best to answer them. At the end of the presentation, we're going to have a long Q&A session. So by all means, you can ask as many questions as you want. We can throw some ideas around, and it should be pretty cool. But the question to the room right now, type into the text chat. Let me know, what do you think the answer to this is? What influences a stock's price? So I'll give you a couple of seconds to do that. What influences a stock's price? So straight in there, we've got some guys saying earnings, projections, demand, supply and demand, Fed policy. Oh, yeah, absolutely. Emotions, earnings, fear and greed. Fear and greed. A lot of people are quite emotional in the room, I can tell today. Funds buying perceived potential, liquidity. Tom, I can't see your surname, but he very astutely wrote everything you can imagine. Yeah, so I would agree with him on that. There are a lot of things that can influence a stock, and it's basically about how much they influence the stock. Tom Plaskett, thanks, mate. So yeah, absolutely. So there's quite a few things that can influence a stock, and what I've tried to do, and the kind of philosophy that we've taken with Unusual Activity, is to take them into certain directions. So what influences a stock's price? Well, there's two main dimensions. There's the quantifiable information, which is, taking into account things that are known about a stock, the fundamentals, the industry, the earnings, the outlook, a lot of the things that you guys mentioned just then, earnings, all that type of jazz. But then there's the more emotional side of things, right? I mentioned that quite a few of you guys are emotional in the room today because there were so many people typing in fear and greed, emotion, blah, 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 blah. And those are powerful factors that affect a stock, and it's usually unquantifiable, right? How do you quantify fear and greed towards a stock? And it's general sentiment and general feeling towards a stock. So it's the combination of these quantifiable, down the line metrics and the unquantifiable information, which is essentially a lot of the time a reaction to new information that results in what we call the market's perception, right? This is how the market views that particular stock, the viewpoint that the market has. Now, as we all know, it comes down to this. Perception is what equals price. No, I didn't write fundamentals equals price or technicals equals price. It's perception equals price. And perception is a combination of the quantifiable things and the unquantifiable things, the relationship between the two, and overall, the emotional aspects, everything we talked about. The perception that the market has of the stock is what will equal its price, right? That's why value investing, like the Warren Buffett type of methodology, is all about taking advantage of skews in market perception to purchase a stock at a lower price so that you can, make profit as that stock returns to value. So what are our goals? What are we trying to achieve? What is everyone, there's hundreds of people in this room today. What are we all trying to achieve? Because I think sometimes when you're trading and you're trying to, grind things out day after day, it's easy to lose sight of your goals, right? And our goals as a trader, as someone that trades stocks, is to look for information, and react to information that's going to cause a shift in this perception. Right, this is what we're trying to do. So whether you're using, volume information, order flow, candlestick patterns, a crossover of your stochastics, earnings information, fundamentals, all we are trying to do is look for information that's going to cause a shift in the way that the market perceives a stock. And this shift in perception is ultimately what's going to result in that change in supply and demand, right? And a change in supply and demand is going to result in a change in price, right? That's basically how stocks work. Do these basic ideas make sense, guys? Give me some yeses in the room if you're with me so far. So everyone here is looking for information that's going to cause a shift in perception, right? A shift in the way that the market views a stock, and you want to profit from that as quickly as possible, right? From that shift in perception. That shift can be short term, if you're day trading, and it can be longer term, if you're a value investor, whatever it might be. But ultimately, we're looking for shifts in perception. Okay, brilliant. Lots of yeses. Everyone's with me so far. So here's another question now. What information creates this shift in perception, right? What information creates this shift in perception? Because that's what we care about. That's the crux of this presentation. We want the right types of information to pay attention to that will give us the highest probability of success. So over the next few slides, what we're going to do is break down the different sources of information that we pay attention to, and we also have a unique spin on that information. So when we get to the end of the slides, I'll give you that spin, but I just want to allude to it right now. So we have a powerful way of looking at this information to give us an edge. So I'm going to break this down, and we're going to hopefully share some good ideas with you. So we're going to start from the top. Right, so the key thing that everyone here is paying attention to, and a few of you guys mentioned it, things like the FOMC, etc., is breaking macro news. Right, so we're talking here about major economic releases. We're talking about things like the Fed. We're talking about GDP, non-farm payrolls. We're talking about all of these types of things, right? Major releases that have an effect on interest rates, that have an effect on the perception of how well the economy is doing. Important speeches like Janet Yellen, if she's talking about what's happening in the market, if we've got some of the Fed speakers stepping up, someone from the ECB, all of these macro events, they influence pretty much everything, right? Whether you're talking about FX, whether you're talking about commodities, whether you're talking about individual stocks, they influence everything. And this is a key high-level point to start with. Statements regarding major global economic powers, statements influencing interest rate perceptions, right? We're in that environment right now where the Fed is about to make its first interest rate increase. Well, it's been about to make it for the last 2 years, so it's gonna be coming at some point. But the illusions are we're going to be having something, something happening in December. Who knows? We'll see. We'll see what they say next. But there were some pretty powerful statements. So this is high up, up the tree in terms of what you pay attention to. John Hayward's mentioned something. So a shift in perception causes a change in supply and demand, not a change in supply and demand causing a shift in perception. See, John, I like the way you put that. The two things can kind of work in opposites with each other, with the one leading to the other. But more often than not, you're seeing this overall shift in perception, and that overall shift is what's causing the shift in supply and demand. But sometimes, you can see reactionary trading, which is just literally traders causing a shift in demand over the short term. Other traders thinking, oh, there's a whale that's coming to the market. They must know something about this stock, and then piling in. So sometimes supply itself can cause the shift in perception, even though nothing has happened. And that's a really good point that you made. And that's kind of something that we focus on, in terms of what these larger traders are doing and how they're reacting to the market. So I'll try and clarify that aspect of things a lot further as we go through this. Hi guys, I think someone else has their mic open. Jeanette, if you want to check on that for me. Okay, we can hear someone shuffling around, but no worries. Okay, so next on our hit list, we're going to go through the biggies. Next on our hit list is technicals. So technicals is all about, it's the obvious stuff. Major support and resistance areas, key areas that you want to pay attention to. Areas that a lot of traders can see through the multitude of methods that are out there. They are the key areas to pay attention to, and that's kind of where you see a lot of reactionary trading. Stocks hitting 52-week highs and lows. There's a lot of algos that are programmed around these major metrics in the way that they work. So that's the key thing to pay attention to. New highs, new lows. I mean, these are obvious things. You can find screens for this information all day long. So these types of technicals are what most people are paying attention to, where the volume and where a lot of information is coming in. Patterns as well, the major patterns, things like heads and shoulders, cup and handles, these types of things, where there is this larger perception, market perception of what's going on. It doesn't necessarily mean that it'll work in the way that you expect it to. However, this is what the market is paying attention to. This is what a large groups of traders are paying attention to, and you're likely to see lots of traders, lots of groups of traders reacting at these points as a result of the clarity that you see there. So we've got technicals there. We've gone back to breaking news now, but we're talking less macro and more micro in terms of breaking news than what I mean in this aspect. So specific news about that stock, right? Whether the stock's about to make a major deal, if it's going through a merger process, even rumors about mergers can have major influences because it affects the unquantifiable relationship, unquantifiable view that traders have of that stock. If there is a merger taking place, the stock suddenly increases in value, even though, this is just an idea right now. It may never even happen. So the perception that that traders have of that particular stock based upon deals, mergers, bankruptcies, even rumors, buying the rumor, selling the fact, all these types of things, they can have major influencing power over that stock. And essentially what has the most power is news that we, inverted commas, say has not been priced in. News that's a shock. Right? News that's unexpected, right? This is stating the obvious, but this type of information, be it a deal, be it a merger, be it bankruptcies for sure, be it a rumor about a new product, whatever it might be, information that has not been priced in, that hasn't yet been quantified, and thus is unquantifiable and creates an emotional response. These are the types of trading influences that can cause a major shift in stocks. Of course, you've got like regular things like industry news that affect that entire industry as a whole as well. And then we have like the kind of more kookier side of things like TV mentions, whether they've been mentioned on CNBC in a major show, on Bloomberg, and this type of thing to a wider audience, sentiment, how traders as a whole, investors as a whole view a particular stock. Sentiment can be influenced on forums and websites as well. So these types of things can have an influencing factor. News is an incredibly powerful method to shift the perception of a stock, right? Breaking news, as I just mentioned, about a particular stock, that it can cause an incredibly quick shift in the way the market perceives and views a stock. So now we're going to go into the more quantifiable side of things. So we're talking more about upgrades and downgrades. And upgrades and downgrades are, we've all seen this type of information. So-and-so company has changed their view on this stock and they've given it a rating of X. And these kind of upgrades and downgrades, these analysis points, they provide an insight into what professional investors are thinking about a particular stock. Their reason for putting that information out there, sometimes it can be questionable, but these are the professional houses. These are influential analysts. These are, opinions that people care about, and they can have a major impact on short-term price movement, right? And for anyone here that's a day trader or a short-term swing trader, you care about this information because it can cause a short-term shift in volatility that you can take advantage of, and that's essentially what you're trying to do. So we're talking here about guys like Goldman Sachs, Bank of America, Credit Suisse, and there's quite a few smaller firms out there that have, a good amount of influencing power. So upgrades and downgrades, it's a key thing to pay attention to. It has this shift in perception on that stock. Okay, next on our hit list, which is something that a lot of you guys mentioned going into this, is earnings, right? Earnings is essentially the profit that a company makes, right? It's that simple. And analysts will base their future value of that particular company on earnings projections, And these projections are going to influence the perception that the market has. So a company's be on target, but if they've changed their projections in some way, shape, or form compared to what the market expected, it can cause a sell-off, right? Even though their earnings came in as expected, and that's it's the short-term view or the historical view and the longer-term view that people take into account, that traders take into account with this type of information. Earnings season is essentially based upon one idea. It's about analyst expectation versus actual. That's it. These dramatic shifts, volatility, whatever you see on earnings, is basically that relationship. It's how analysts view a stock and the actual data that came out. And of course, if the company surprises, we will see a move. If the company surprises based upon what they did last quarter, we'll see a move. If the company surprises based upon their projections, we'll also see a move. John just meant, are stocks in a bubble because of perceptions and erroneous expectations? That's exactly what bubbles are. I don't know if we're in a bubble right now. Some say we are. Who knows? And it always seems like it's one of those things where, in hindsight, yeah, we were definitely in a bubble. But when you're in there, there were a lot of traders, a lot of people saying that we were in a bubble 3 years ago. So, there's always this constant group, no matter where we are, who are saying we're in a bubble. And then there's the other side of the equation who's saying we aren't. So, I think Alan Greenspan described it as irrational exuberance, right? And that's exactly what it is. It's the perception that traders have or investors have of a stock is irrational compared to what that stock is actually doing. They've overvalued, the stocks, and their expectations are just far too high as to what they can achieve. And we saw the most beautiful example of that in the dot-com crash. We had companies that weren't even making money, that had no profits, no revenues, and they had these sky-high valuations. That's an example. That's the perfect example of irrational exuberance. So another thing, that's a great thing to talk about. We could talk about that kind of thing all day long. So insider transactions is kind of the next thing on our hit list. What we care about are what influences, right? So we talked earlier on about upgrades and downgrades. Those are influences, people that can have an effect on the way that a market is viewed or the way that a stock is viewed. Insider transactions are the views of people inside that company, right? C-level members of that company. And, we're seeing through their transactions, through their purchasing of the stock or selling of the stock, we're seeing the confidence that they have within the business that they operate in, the business that they're leading. And the business that they have a massive influencing power in. And obviously some of the time, this is just, someone funding their new vacation home, whatever it might be. But a lot of the time, it does provide a great insight into how, if you're seeing an overall trend in these C-level execs, as to how they're viewing their stock, especially if it's ahead of earnings and this type of thing, which, it's got to be a long way ahead of earnings, but it just gives you an overall view, the overall momentum as to what's taking place around that stock. All right, so this is something that's a bit more interesting in terms of what we do and the information that we pay attention to. Has anyone here ever used Google Trends? Give me some no's if you've never done so, yeses if you have. Google Trends. So I think it's google.com/trends. Okay, so most people are saying no. Okay, great. So we pay attention to search anomalies. Search anomalies are essentially the data that is gathered from Google in terms of what people are searching for and what they're paying attention to the most and this type of thing. So we gather it from Google search trend data, and there's a few other professional sources that provide this information kind of dissected a little more. I've discovered something quite interesting by analyzing this information, and it's a pretty consistent trend, is that as the price of a stock rises, so we're seeing this red line increasing, that's the stock price rising, what you'll see is searches for that particular stock decreasing, right? And this is kind of a little counterintuitive to me, because I would have thought, people would, no matter what happens, if the stock is rising really rapidly, they'd search loads. If it's selling off, they'd search loads as well. But for some reason, when a stock is rising, there's a decrease in search. And I think that probably is because, people are kind of confident. Greed is one of those emotions that doesn't, you're much more relaxed with greed than you are with fear, relatively speaking, right? Fear is what causes panic. So if you're seeing your stock fall, we've found that search trend data increases, right? So the stock is falling, and the trend in terms of, the trend in terms of, what people are looking for is increasing. So you can imagine, your stock's going down, you become frantic. Oh, what's going on with, AAPL today? And you start Googling away and this type of thing. And I think that relationship is inherent, and it's a great indicator of emotion, of how people are feeling, right? And Simon's just coming with, because everyone's busy buying it. Absolutely. So if the stock's going up, you don't have time to search. You're calling your broker. But it's a great indicator of emotion. When you see, traders becoming emotional, that's when you see these major reactions in price. It can be greed, it can be fear, but especially fear. Fear is a powerful emotion. That's why, there's that old saying that bulls go up the stairs and bears jump out the window. And it works in the same way in search data for sure, because I think fear is a powerful emotion that drives what people are looking for, what people are paying attention to, and it's pretty powerful. So we found that fear results in increased search behavior. So if you start seeing these increases in search, it's something that's worth paying attention to. And greed is, if you're seeing lulls in search behavior, it can oftentimes lead to a continuation in that particular stock. So it's a pretty interesting and really simple data to analyze as well. All right, so next on our hit list, we are talking about order flow anomalies, right? So order flow anomalies, really interesting. This is something that I've dedicated a huge amount of my life to, analyzing order flow. I've developed numerous software around this edge. One of the big ways that I traded for a long time was news trading, and we were taking advantage of this information as well. So order flow anomalies are really straightforward. Basically, what you're looking for are there's two main dimensions. You're looking for block trades. You're looking for large block purchases, which is someone making a huge purchase in a single block. And block trades usually show institutional trading, so it's the larger companies, the larger trades that are taking place. And generally speaking, these trades are done over the phone and are reported after the fact electronically. So it's information that's provided by these large firms. And it's reported later on. If a large trade is taking place through an ECM platform, the trade's usually broken up into many smaller trades rather than one big gigantic one. So large trades are important, smaller trades are also important. So we're looking for a large bid-ask size, and we're looking conversely for an unusual number of prints, an unusual number of trades. Right. So if there's an increase in trades over a certain time period, that's something we pay attention to. And if there's large trades coming through on that particular stock, that's something we pay attention to. The best environment is when you have both together, when you have like a heck of a lot of trades and a lot of those are large as well, because that causes gigantic moves. So it's really, really simple. The idea behind order flow analysis is incredibly simple. You're just basically paying attention to the data that's coming through and how that data can influence price, right? And that data can influence in the short term by a large trade, and it can influence over a slightly longer amount of time over an increase in the number of trades. Very, very simple concept. Of course, we also look at unusual options trading as well. Hence the name of the service, unusual activity. We kind of focus it around everything, but unusual options is a big, big part of what we do, because it's just such a great view in terms of what traders are doing, how they're looking at the market, and their interpretations of what's going on. So unusual options, we pay attention to large and unusual trades and blocks. We're looking at large puts being bought, large calls being bought. So exact same deal as the order flow anomalies. We're looking for what I call sweeps of calls and puts. So sweeps are the same thing we described with order flow. It's a summation of a small amount of contracts, but they're executed around the same time. So it's just a lot more trades that are smaller. And basically, it's the equivalent of a lump sum transaction, exactly in the same way that we would analyze order flow anomalies as well. And one of the key things we pay attention to as well is large trades, large options trades in relatively thinly traded securities as well. So order flow analysis, unusual options activity, they're incredibly important. But what unusual options activity and why it's such a pivotal part of what we do is that it gives you the indication of a large player in the security. And a friend of mine described it best. What we're trying to do is be a fly on an elephant's ass, right? Not literally, but that's exactly what we're trying to do. We're trying to look for these elephants, these large traders, and we just want to replicate and copy what they're doing in order to take advantage of what's taking place. So the key thing is players, on the whole, they don't want to be noticed in the underlying stocks, so they'll use options to basically apply that position. Options are like a really quick way to accumulate rights to the underlying security, and for us it serves as a looking glass, as a way to perceive the upside or downside potential of that particular stock in a much more transparent way, because it just makes things a lot simpler. And in a lot of ways, it's incredibly similar to the insider transactions from C-level, CEO, CFO level executives. These traders that are taking these large bets, they have information or analysis or some point of view that is something that they pay attention to, and a key part of what they do. And we're basically looking for, it's not just single trades that matter to us. It's basically I guess the best way to describe it is, say, you've got this large trade come through and you want to pay attention to the other trades that are around that trade, right? And to give you an overall view of how traders as a whole are viewing the sentiment towards that particular stock. So we pay attention to single big block trades, and we're also looking for the trades that take place around it. In case, I think someone just mentioned it earlier on, that whether that's being used for a hedge. You want to look at the sentiment, and you want that sentiment to be affirmed by other relatively large trades, by the flow in terms of the numbers of trades that are coming through also. Okay, so a key thing that we also pay attention to, and is part of our hit list, is correlations. Right, correlations. For me, it's one of the most important parts of being a trader, is understanding intermarket correlations, the way that different market sectors, commodities, currencies, and everything, and the way they interlink and relate to each other, and the relationships between all of them. But it just seems to be one of these things that traders don't pay a lot of attention to. I think it's incredibly powerful, and it's something that we include in what we do. And basically, it's about analyzing news, information, and anything else that can be out there that affects a stock, a sector, the macro environment. It's also going to affect stocks that are correlated to that particular instrument, right? If we're going to see moves in oils, it's likely to affect the stocks in the mining industry. It's likely to affect stocks that create products for the mining industry. It's likely to have this kind of domino effect on lots of different industries. So, correlations are incredibly important to pay attention to, and it's just something that gives you a real view of what's likely to happen in terms of the stocks that you might be trading, and the influencing powers that they can have. A big buzzword in terms of analysis that's being thrown around is, analyzing the crowd and social media and all this type of thing. I'm sure everyone here has kind of heard that this is the next big thing, and what people are, traders are paying a lot of attention to is analyzing the crowd and how we can use crowd information to basically, garner ideas and this type of thing. We found it to be an incredibly difficult thing. We've looked at algos, we've applied, statistical work to it, and there's just so much noise that it's become one of those things that's quite difficult to do. And we've just found incredibly simple ways that have been effective in terms of using crowd information or social media information. One is breaking news. Twitter and StockTwits, they provide this amazing platform where literally anyone can break news, right? You don't have to, create a press release that goes out to the Financial Times or Wall Street Journal or whatever it might be. You can literally learn something within seconds and share that information. So, the crowd, as Simon's beat me to it, the crowd doesn't always move the market, but sometimes there can be information that's released is released in a crowd environment, as in the same time that the big money is getting access to that information by leaks. Because it's just so easy now with Twitter. It's just so easy with StockTwits. So you'll see quite a few examples of leaked information, of information that's early released that can have an influencing effect. Breaking news basically. What we also pay attention to are, this is similar into the search activity. So it kind of gives you more of a medium-ish term view. But when we look for activity spikes, when a stock experiences a significant increase in activity, it's pretty powerful. But in social data, we've found that it works in both ways. So, you'll see an increase in activity if the stock is, bearish, and you'll see an increase in social activity if the stock is incredibly bullish. Converse to what we talked about earlier on with search data, where only the bearish information kind of resulted in, increase in search activity. And we also look at, average activity, how much is this stock talked about on the whole, and then if you see increases in that discussion over the medium or longer term, it gives you a great indication of the participants and the increase in participants around that particular stock. But it's a social media, it's a cool way to kind of gauge sentiment, just like the search data that we talked about earlier. So now we're going to move on to the more interesting I would like to say, parts of the equation. High frequency trading, the algos, the devil, as many people have come to know it as. High frequency trading is just basically the action of automated trading algorithms, and it's just basically powerful computers, having some fun in the stock market. So it's impossible to keep up with individual algos because they trade just so quickly in terms of what they're doing, but you can, by analyzing the tape and the information that's coming through in the same way that we analyze order flow, you can analyze positioning, overall positioning directionality based upon this high-frequency trading data and what algos are doing. You don't know exactly if the individual directions of certain algos. That's just impossible. But you can get an overall viewpoint of the directionality that's being implied, because a lot of the trading volume that we see in the market now is automated. It's these companies taking short-term advantage of what's taking place in the market. So guys, what do we look at? What do we pay attention to? There's quite a few bits and pieces that we've gone through today. Breaking news, technical analysis, upgrades and downgrades, earnings, insider transactions, search anomalies, order flow anomalies, unusual options activity, correlations, social media. There's a bunch of powerful market influences. They vary from time to time in terms of their effect, but all of these things can have an influencing capacity on the market. Now, guys, I alluded to something that we pay attention to that kind of is a big part of what we do. So, guys, a big question. What does all of this information have in common, right? Everything that we talked about, the news, the upgrades, downgrades, insider transactions, everything else that we talked about, it has one thing in common. And that one single word is volume, right? That's the key, volume. Volume, ultimately, all the price action of a stock will first appear in order flow and volume, right? If we've got something that influences the perception of a stock, whether it be emotional, whether it be irrational, whether it be quantifiable, what it's going to result in is people buying and selling that stock. And that information is going to boil down to order flow. It's going to boil down to volume. Those are the key things. Volume, it condenses all of this information down to a singular measure, right? Spikes in volume are always going to relate to one or more of the influencing factors that we've described, right? So all of the aspects of trading, all of the different market participants, they will be affected by lots of the different things that we've talked about, and it will result in a change in volume. It will result in a change in order flow and ultimately a change in price. So guys, what do we do at Unusual Activity? What do we focus on? What are we all about? So there's quite a few news services out there. I'm sure you guys have come across a ton of them. There's a bunch in the space. We do something that's unique and different. So like all of this, news is a commodity, right? Anyone can get access to news from any of these services. It's a commodity that when something becomes a commodity, like news is the same information everywhere, it's about price. What kind of price can you get that information for? So unlike, like most services, we provide this news information. I call them influencing factors. So breaking news, insider transactions, all these types of things, options, unusual options activity, all of this information is an influencing factor on the market. So you can get headlines that provide this information. And a lot of these services, if you subscribe to them, it's just basically headline, 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 headline. What we do that's unique is that we combine that information with volume information, right? So we'll put out a headline, we'll put out an influencing factor, and then we will, if volume comes into the marketplace as a result of that factor, we'll combine the two together, and you'll get an alert based upon that information. That's unique. There's no one else that I've come across that does that, where they combine news and every other type of influencing factor with volume. So the key thing that we focus on are volume spikes, real-time volume, what's actually taking place in the market, in the now, and I guess the simple equation in terms of what we do is we combine influencer information, which is everything that we've talked about, right? All these different aspects, the search anomalies, the HFT stuff, high frequency trading, the unusual options, everything that we've talked about in combination with volume is going to result in a market move, right? Volume is the one, it's the one ring that rules them all, right? It's the one thing that combines everything together. So what we are at Unusual Activity, we're a trade ideas platform. We combine influencer information with volume to give you a platform that's incredibly simple and provides headlines and information that you can use to get yourself an edge in the market. What we do is very, very simple, simple in terms of the way we put that information across, and we allow you to gain a consistent edge in the marketplace as a result. We're still in beta release with our service, and we're looking for early adopters to be a part of it. The product, when it's on full release, is going to be $99 a month, but we've got an absolutely fantastic offer for everyone that's here today. So as part of our special early adopters offer, you're going to get a class recording that goes into greater detail on all the information sources that we've discussed, how we report on them, how to trade them, which is worth $299, probably a heck of a lot more, but we've kind of priced it at that value. You get 3 months of access to our Unusual Activity data feed, which is $297 of access at $99 a month. So it's sounding pretty cool so far. We'll also give you past recordings on Unusual Options activity, which is $150. Insider transactions, another $150. SEC filings, how to trade this information, what it means, etc. And then we'll also talk about news events, how to trade this information, what's key, what you need to pay attention to, what that's all about. The total package that we're going to be giving to everyone here today is worth $1,196. So over $1,000 of information or value, to give yourselves a trading edge. We've got an amazing 77% discount on our $99 a month monthly price. So for $97, you will have 3 months of access. $97, you have 3 months of access to our service, unusualactivity.net/yes. If you've got any questions, feel free to ask away. I'll be happy to answer them. There's a 30-day money-back guarantee. So sign up to the service today. You've got 3 months of access for $97, right? Not $97 a month. Three whole months, a quarter of access for $97. There is no new service out there that is going to be at this price. And by the way, guys, you are grandfathered in at this price. So after that point, your subscription will be $97 a quarter for the rest of your subscription. There is no price increase. Everyone will pay that exact same price. So you got a 30-day money-back guarantee. Unusualactivity.net/yes. Regard is asking, is it a live trading chat room? No, Regard, we're just an information service. We basically combine the information that we've talked about, the influencing the information that we've talked about with volume, and it's a feed that you can take a look at. Someone's asking, what does the feed look like? Here's today's feed. So you can scroll through these alerts here that you see in green and red. These would have been, audible alerts that alert you to major volume here in the markets as a result of those particular influencing factors. So it's news, headlines, etc. But when there's key things to pay attention to, you will see alerts. You will see, a change in the platform. There'll be like a drop down here at the top that will say, it'll come with a siren, and it will tell you the information that you need to pay attention to. So I hope that makes sense for you there, Scott. But 77% discount, $97 a quarter. Unusualactivity.net/yes. What we focus on right now is stocks and options, right? Unusual activity, unusual options activity, that's a big part of what we do. We provide a lot of unusual options activity information to traders. That's a key part of our research on a daily basis. We're not focusing on futures or spot FX just yet. We do mention currencies in the context of correlations, in the context of if they're an influencing factor on stocks. But right now, it's a stocks and options focused service. But of course, unusual activity exists in everything. So as we expand the service, as you guys say, we love what you do, and everyone so far that's been using the service loves what we do. You get it. So Harry's asking, how much do we pay for this for the $1,196 package? Harry, you're paying $97 for it. So you're saying $97, and you're getting 3 months of access to the platform, and you're getting everything that I talked about earlier on. All the educational stuff as well. Jem, currently, to get access to the service, you would have to log into the site, but you should be able to log on your phone as well if you want to keep an eye on things. We do have this, the range of what we're doing in terms of the alert side of things expanding pretty soon. We'll be having text-based alerts and this type of thing also. So this is an early adopters deal, right? So everyone that's here today, you have the chance to be an early adopter in our service, to be part of it before we hit the mainstream, before this becomes the huge service that we're going to make it be. It's pretty big right now. We have a large number of users, but we're still making this something great, and and with your input and your feedback, it will become even better than it is right now. Okay, so all right, questions coming through. Hi, Scott. Yeah, we're expanding the range of information and educational information that's offered in the UA feed. It's just simply a question of the real estate in which we use for that type of information. Right? There's a lot of traders that want that. There's a lot of traders that don't want that. It's just a question of logistics in terms of where we put that information so it's available. So we're working on some solutions for that, and it's definitely something we want to do to expand the range of what traders have available to them. The key thing for us as well is to keep things simple. I mean, the feed itself is very simple in the way that it looks, acts, and that's a key thing that we want to keep, but also giving users much more information if they want it. Right now, Peter, the filtration is limited. It's basically everything you see in the feed. We've tried to keep it simple, but we do have a filtering mechanism that's on its way. So there's that's being developed, along with alerts that are kind of more mobile, that come in, via text message or email and this type of thing. So we've got some cool things on the way. Hi, Jem. So, you've just mentioned a couple of brothers that have ponytails. Our service, in the way that it works, I mean, from what I know, their service, they provide unusual options activity. We provide a similar thing. This, in my opinion, this is commoditized information, right? It's the same everywhere. And it's just simply, when something becomes a commodity, it becomes about competing on price. And I don't think you can possibly get a price better than what we're offering here today. You've got 30 days to try it out, to see if it's for you, to apply it to your trading. And if it's not, by all means, you can ask for a refund. That's no problem at all. That's a pretty straightforward. Hi, Wendy's saying, I'm just logged in. Is there a recording of this event? I don't know, but I hope there will be, so you can check that out. But Wendy, I highly recommend that you sign up to our service and get the 30 days of access, so you can learn more about what we're doing as well. Okay, so can you answer? Absolutely, Jen. Thank you for your comments. Idea, can I show you some examples of the feed? All right, there's a bunch of questions. What I'll do is I'll have the feed up on the side here. so you can look through some of the aspects. It's a mix of things. You know, we get information from Twitter. We get information from a bunch of different sources from all the major news platforms. You know, it's one of these eclectic. You know, what we care about and what everyone in this room cares about is what influences a stock's price. Right? That's what you care about. That's what matters. That's what, you know, being a trader is all about. We care about the information that's going to have an effect. We care about the information that's going to cause a shift in the market. So that's what the service is all about. I'm just going to type in the domain for everyone. Unusual activity.net/yes. Okay. So send to all. So hopefully you guys can see that. Scott is asking, is this automated? Do you have 500 Chinese manually type in this information in? Scott, this is not automated. So some elements are to keep things as fast as possible, right? When it's time sensitive, if, you know, fast moving information. So that it's kind of half and half. There are some elements that are automated, but we have our analyst team. We have, you know, myself and the other guys that work with me, paying attention to what's moving the markets, paying attention to what's key. So it's a mixture of both, and that's what, you know, creates the power. So you're using computing technology in combination with humans, you know, to make things work. Okay. Scott is asking, what platform do we send the feed? Are you using like Omnovia, GoToMeeting? No, Scott, the feed is its own platform. It's a web-based platform. You don't need to download anything. It's simply you just log in and you've got access. Very, very simple. There's no downloading. There's no messing about. There's no nothing. Michael's asking an interesting question. What is the typical lag time between aggregating an information spike and correlating it to a spike in trading volume and disseminating this to subscribers? So, Michael, this is a how long is a piece of string type of question, because it's one of those things. What you'll see is sometimes news will come out and then nothing will happen. And then as that information gets disseminated across multiple trading desks, you'll start seeing the influencing power of that news. And then, boom, it'll just suddenly start moving. And this may be 20, 30 minutes after that piece of news has been shared. It just hasn't been widely distributed. Only a few platforms have covered it. So there's things like that happening, and then there's, you know, news that's instantaneous in terms of reaction. So we like to react as quickly as possible to everything. That's the key thing. Our lag time is exceptionally minimal. You know, we have a lot of powerful programs running and some incredibly intelligent and smart guys looking after what we do. So we are quick. We are incredibly fast. We put the information out there as quick as possible. You know, sometimes it's automated in the way that it works. Sometimes there is a bit of analysis to make sure that the very best information is out there as well. So it's basically as fast as, you know, faster than anyone else is what we're aiming for and what we're going for. Okay. Bill's asking, what are the parameters for reporting unusual option volume in options? Bill, that just varies from stock to stock. So, you know, the analysts on the team will basically base it upon how that stock generally trades. Okay, guys, there's a bunch of more questions, but I think my time is running to its close. You know, as someone else is about to step in onto the mic. But unusualactivity.net/yes. This is Judith is asking, is this for all types of markets? We're primarily aimed at the stock market and unusual options activity. That's the key thing we pay attention to. Michael's asking, do we maintain certain feeds? Michael, yes. We maintain all the major feeds that are available out there, and you know, our mission is to short circuit you know, the cost factors that are available. I hope that makes sense. So yeah, we pay attention to basically, you know, everything that's out there. We want to get you the information as fast as humanly possible. Guys, I would love to there's a bunch more questions. If you have any more questions, support@unusualactivity.net, not .com, .net. Please, write down, scribble down the URL for the access to our service, and we hope to see you on the other side. Thank you so much for your time today. Jeanette, if you want to take over, it's all yours.